Hey everyone, thanks for joining in. Good to have you all here. I'm going to see a lot of people here, all the way from Kenya as well. Okay, just a quick sound check before we go on. Just testing from my side because there's a little bit of a lag here. Hey everyone. Okay, sound seems to be good from my side. Let me know if there's any issues from your side. Okay, so we are going to start with a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general advice, as the information or advice given does not take into account your particular objectives, financial situation, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products, thus carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are, for example, only. You are reminded that past performance is not indicative of future performance. I think I'm going to need, I probably need to update the disclaimer that we don't offer any investment services or trading services at all. I don't offer that. Team at Octa FX doesn't offer that as well. So be mindful if there are scammers out there. Okay, so let's jump in. So we got EURUSD. I think there's going to be a lot of questions about what's going to happen with the whole FOMC stuff, Jackson Hole, and whatever not. So yeah, let's take a look at what's going on for this week. We are actually waiting for another data today. In 28 minutes, we've got durable goods order from the US. We've got the PMI numbers yesterday out from France, Germany, Eurozone, the UK, and the US. So let's take a look at the numbers there. So we've got the France manufacturing PMI number. That's expected to come in at 49. It came in at 49. It was expected to come in lower than last month. The services PMI actually fell a little bit more for France. 53 expected, came in at 51, but that's not really the main issue. The main issue is actually Germany. So we've got Germany numbers. The manufacturing numbers came up a little bit higher than expected. Expectation was 48.2. Number came in at 49.8. Services fell in a little bit lower. Expected 49, came in at 48.2. The problem isn't the number itself, but it's actually for Germany is that it's already below 50. For those of you that are new and how you're gonna read the PMI numbers, a reading below 50. That's showing signs that the economy is contracting. Okay, so take a look at the combined numbers for the Eurozone. Borderline services PMI at 50.2, very, very close to borderline there. The manufacturing PMI is actually below 50. It has been below 50 since last month. That's the numbers from the Eurozone. The numbers from the UK, manufacturing PMI dropped below 50, expectation of 51. It came in at 46. Services PMI around 52.5, so borderline. Composite PMI is actually at 50.9. The numbers from the US side, that's services fell really, really sharply. Expectation was 49.2. It came in at 44.1. Manufacturing PMI, it's expected to come in at 52, came in at 51. Composite number is actually at 45. So we are showing signs of economic slowdown right now, basically in the Eurozone. That's to be expected, especially from Germany. That's going to drag the Eurozone, and part of the reason is the whole energy crisis going on in the Eurozone right now. Okay. All right, so that's PMI numbers out of the way. So durable goods orders are going to impact the market today. It might, but I think a lot of the attention is going to be on the Jackson Hole Symposium. That's going to kick off tomorrow. If for those that doesn't know what a Jackson Hole Symposium is, it's basically just an annual Fed conference. So topics like inflation, that's going to be discussed. How the FOMC is going to react in the future, that's likely going to be discussed. We talked about this on Monday's webinar, which is a webinar for the Telegram channel, the Telegram group that I actually posted stuff on. So we already talked a little bit about that, but for those that just joined in today, with the what's going to be discussed at the symposium, the Jackson Hole Symposium, which is going to start tomorrow. Basically, I think the whole market right now, if you take a look at the market movement, it's not really just a matter of US right now. It's more on a global recession scale. So we're looking at a slowdown in economic growth in the Eurozone, the UK, the US, and then we saw China cutting rates last week, and then again this week on Monday. We talked about that on the Outlook already. So there's actually a concern about a global recession, and that's basically the main focus right now, right? We are looking at a little bit of a confusion in the market, obviously, because last CPI number that came in lower for the US. And then all of a sudden, everyone kind of expected, oh yeah, you know what, FOMC might slow down and stuff like that. And then we got the FOMC meeting minutes, with which we already discussed on the channel as well. We've got the FOMC meeting minutes came out. The initial reaction to the market was I think a lot of people are kind of misread it. It's a really long FOMC meeting minutes. I've already posted the link on the channel as well. It's quite long. There's a lot about what they talk about. There's this concern about GDP and whatever not, but the last few sentences is that they are going to be focusing on price stability. That means they know whatever they're doing by hiking interest rate, that's going to have an economic, it's going to slow down the growth pace, the economic growth pace. They know what's going on, but they're still going to focus on price stability, which means they are focusing on fighting inflation to bring that inflation target down to 2%. Right now, it's 8.7 or 8.6, I believe that was the last reading. So this is the whole issue. So we got one CPI numbers, and then everyone thought, oh yeah, you know what, FOMC is gonna relax a little bit. Then we've got the meeting minutes came out. The meeting minutes is actually the decision FOMC made before the CPI number came out. So that kind of scared the market a little bit. And then I think the whole reading right now, if we take a look at VIX, I think there's a little bit of a fear building up that the FOMC, Jerome Powell's going to talk about, Jerome Powell's going to give a speech out on Friday. That's the second day of the Jackson Hole Symposium. I think the fear right now is that the FOMC might take a look at the CPI number and they're going to say, you know what, it's only one CPI. It's not evident enough for us to actually slow down the pace of interest rate hikes. That's the wording that you need to watch out for. This might trickle in from Fed members maybe today, maybe tomorrow. But on Friday, there's going to be a speech from Jerome Powell. So either he's going to say that one CPI is not evidence enough, or he's going to say, yeah, CPI has gone down a little bit. We can slow down a little bit on the interest rate hikes. That's the thing. There's a little bit of a shift in dollar strength because the consensus that goes to the consensus for the September rate hike, it kind of fluctuates between 50 and 75 basis points. So we got 1 week with 35% probability of a 75 basis point hikes, and then the following week it's 50%, so it kind of flip-flop, and that's probably what's causing a little bit of uneasiness in the market. But hey, that's the overall tone for the market. Doesn't mean that we can't take a look at the market, okay? Because take a look at the EURUSD, for example. We talked about the EURUSD last week on Wednesday as well, same time last week before the breakout happened. I think the breakout happened on Friday. So we were kind of looking at a range. It broke. Right now it's at parity. I think a lot of people are going to be asking me about what's going on with EURUSD. It is trading below parity right now. Is it within reasonable range? Yeah, I was actually kind of expecting a little bit of support to come in at 99.50, but I think the Eurozone Eurozone PMI numbers, especially Germany, kind of drag it down a little bit. So we do have a little bit of a support, more on the psychological level, which is at 99 cents. Right now it is trading below parity. So the euro is actually weaker than the US dollar right now by about 0.5 of a cent. So yeah, 99.50, that was kind of the expected support that we had for Monday. It actually broke below that. So right now we are trading below 99.50. In terms of range, yeah, we still have a little bit of support building up at 99 cents. Does it mean that it's not going to break any lower than 99 cents? It could. I think there's a lot of room to go to the downside, but just to note, below 99 cents, it's kind of a quick drop to 98.50. Historically, let me go into the monthly view for a little bit. Hold on, did I just delete something? Okay, so yeah, here's the monthly view. That's 2002. Technically, this area over here, that's just hypothetical. The euro wasn't in publication. It wasn't actually in circulation until early 2002. I believe it's 2002. So we are currently looking at a 20-year low for the eurozone, which is really tough because what we're looking at is basically we're looking at a potential new low that I haven't seen. I've seen that low, yeah. I mean, in modern times, I don't think a lot of traders have actually seen that low. Personally, when I first started trading, the euro was already above parity, so I haven't actually experienced this low on the euro USD. I think a lot of people are actually experiencing the euro USD like this for the first time. So it's kind of tough because we're looking at a potential new low for the euro USD. So we'll take a look at pivots. Obviously, I think that would be the easiest if we use pivots, right? We basically have a little bit of support around 99 cents. Below 99 cents, we're looking at a move towards 98.50. So both of them are kind of a psychological level for the euro USD. But if we take a look at it by using extensions, these are your FIB extensions. Again, in terms of range, we are looking at about the same range. In terms of 127.2, it falls to around 98.80. Very, very close to 99. I will just wrap it up to 99. So if you guys are going short and you guys are using FIBs as your potential targets, I would probably say, adjust it to 99 cents and 98.50. The 161.8 is actually very close to 98.50. It's actually at 98.47. So again, a lot of you here are used to using FIBs for potential targets. So if you're using these FIBs, just adjust your target accordingly. Just go by what people will estimate. Don't be too precise with the euro USD. Is it really a good time to go in for a quick short on the euro USD? It's kind of a little bit tricky because if you do want to go short right now, you need to make sure your stop losses are actually beyond this high. That would actually be 99.60. You need to have it above 99.60. I would probably wrap it up to about 99.75. So if you're thinking of going short right now, just be mindful. Okay, because you don't have a lot of room. If you go for 99 cents, your risk reward ratio wouldn't be even 1-to-1. You could be targeting 98.50, but again, we don't know what kind of pressure the market is going to get. So at risk, if you're planning to go in short, I would probably hold off trading the euro. I'll be honest. I think it's probably best if you don't have a position yet. If you want to be trading the euro, and if you don't feel comfortable with the whole Jackson Hole Symposium and how the FOMC is gonna say what the FOMC is gonna say in regards to their monetary policy stance, I would say, you know, be really careful, because I think the market itself is a little bit unsure, right? In terms of taking a look at how the Euro USD and the Pound USD has been moving, I think we are kind of really pushing the weekly limits for these currencies. Take a look at the Euro USD, for example. This is on the daily, just to give you an illustration. So we are looking at that support building up already. We have seen, so basically if we throw in the pivots, you're taking a look at you know, a range between support 1 and support 2 on the weekly pivot. In terms of how far the market has actually pushed down since what, Friday. Do we want to count Friday, or do we just want to count Monday? Because if we do Monday, then it'll be this. It's been down 1.17%. If we count Friday in, it's nearly 200 pips. Now this is, it's not just at 200 pips, right? A lot of you are probably thinking, you know what, it's only 200 pips, it's not a big deal, right? I mean, it's, Friday, Monday, Tuesday, Wednesday, 200 pips, no big deal. It is a big deal for the euro because it's at parity. And when the currency is near parity, let me just focus a little bit on the parity side. You don't get to see currencies like the euro, for example, at parity all the time. Right, this is something that happened for the first time ever since the euro was launched physically in circulation. So, yeah, it's a big deal. It's kind of a huge deal. Like, well, 10 years ago we had the Aussie USD at parity with the US dollar, and then it goes about parity. That doesn't happen since 1984. So 1984 to about 2011, 2000 and no, it wasn't 2011. It might start earlier. It's actually 2009, 2010, might be around there. But yeah, again, we're not looking at some, it's just a 200 pip drop. It's not big enough. I think the Euro USD can push further than that. I think it's pretty huge considering this. The range that the Euro USD has been trapped in for a month, from the 18th of July to the 18th of August, that was only just about 133, 140, 150 pips, give or take. That was the monthly range, right? So the Euro USD was sideways until we see that breakaway from the market last week. But it was basically trapped within 150 pips. So if we see the market drop 200 pips, especially in the Euro USD, I think it's a huge deal. So just be mindful with how the market is moving right now. Okay, pretty clear on the Euro USD. We are around support area. We basically have down until about 99 cents, 98.50. If you're thinking of your potential targets, I would be mindful around 99. If you want to scale out at 99, feel free to scale out. You want to adjust your targets beyond 99, then you can go for 98.50, but we're looking at support here building up for the week. It doesn't necessarily mean that, oh yeah, you know what, it's time to buy. I don't think it's a great idea to jump in against the US dollar, especially if the market is afraid of what the FOMC is going to be, how the FOMC is going to react to the previous CPI number, because the speech Jerome Powell is going to give, that's going to be the first speech or press conference in regards to the CPI number that was out in the US that was really low. So yeah, I think there's a lot weighing on the dollar strength. Obviously, everyone is kind of keeping an eye out on the FOMC, what they're going to announce and stuff like that. So Euro USD is obviously going to be affected significantly, but just be mindful it's at around parity. The second issue with the whole Euro USD, why I'm a little bit hesitant to jump in on the short side on the Euro USD right now. Not that it's just at parity. We are actually seeing a little bit of a build up in the Euro Pound. We don't talk about Euro Pound enough, right? But I think if we take a look at the movement today, we are looking at a euro that's actually kind of picking up against the pound here. So, you know, we might see a lot of probably a stronger bearish movement in the pound USD, but on the euro side, it might kind of be choppy, right? So we got a little bit of a strength building up on the euro pound. Range for the euro pound is actually really small. So even if you go by an extension today, we're still looking at a potential correction just up to about 127.2 to 161.8. It's not huge. I'll be honest with you, it's not huge. I mean, we take a look at that range. That's just about 7-8 pips. So you're not really expecting a huge range, but momentum hasn't calmed down yet for the euro pound. So I think on the euro side, we are looking at a little bit of a technical correction. So I'm a little bit hesitant in jumping on a new short for Euro USD. If you have a short from, you know, Friday, Monday, then I think it's okay. But if you're looking for a new position, it's kind of scary to go in long Euro USD because of what the FOMC might say, or members for the Fed members might say anything about you know, how the FOMC should act. And you know, it's kind of risky as well if you want to jump in short on the Euro USD, unless you want to take in that risk where you have your stop loss at around 99.62. So I'm not saying it's not a good idea to jump in. I'm just saying if you need to take a look at the reality of things. I'm not going to be aiming for 98.50. Realistically, you're probably looking at around 99. So you got a 30 pip up in terms of risk, 30 pip down. I mean, it's 30 pip up and 30 pip down. You know, if you're kind of expecting, hey, you know, I'm expecting to go for 100 pips. I don't think it's kind of realistic right now, because we need to pay closer attention to 99 cents. It's a whole number. It's a psychological price level, and that's also where price bounces off. I believe it was yesterday. So it did touch 99, so you definitely need to keep an eye out on 99. I wouldn't be aiming for 98.50. I would go for 99. You guys have a long position, a short position in Euro USD. You want to scale out a little bit at 99. Adjust your position accordingly. I posted something on the Telegram group yesterday. Most of you are probably out of the position that we talk about on Monday, right? Okay, so I think that's what we spent about 20 minutes on the Euro USD. That's fine. Laying down the groundwork for the rest of it. Next up, it's Pound USD. All right. I think we still have a running position. I don't know if you guys get out from this, but there were two targets, 1700 and 1750. Those at 1750, you guys should be out of that position. But if you guys are still gunning for 1700, then nothing has changed. The stop loss is still at 1.1925. If you want to adjust it to break even, it will be around 1.1850. If you do want to adjust your stop loss, moving into break even would be okay. But I mean, if you stick into the plan, initial stop loss would be at 1.1925. If you want to adjust your stop loss, you might want to adjust it to this high here, about 1.1875. That would minimize your stop loss by a lot. We're talking about a potential movement of nearly 50 pips in terms of reducing your risk. But yeah, for Pound USD, there's nothing new. If you guys want to jump in, it's all going to be about the same stop loss that we have here. This is the closest stop loss would be at this high at 1.1878. So if you're planning for a new short, this is from Monday, I believe. If you guys are planning for a new short, then you know this is going to be your risk target. In terms of target, yeah, you can go for 1.17. There is a support at 1.1750 as well, but you can go for 1.17. Risk reward ratio wouldn't be 1-to-1. You're going to be risking a lot more. You're risking about 100 pips for a potential 79, 80 pips gain. So think about it, whether this is for you or not. It's probably going to speed up a little bit once price get out of the Ichimoku cloud. But right now, these are the current positions. Either you have this from Monday, or you have this one for today if you're thinking of going short. But again, it's probably going to be better if you wait for price to come out of that Ichimoku cloud. In terms of momentum, we still have a little bit of leftover momentum here, but just be mindful as well. There's a little bit of a concern here, and this is probably why it's kind of bouncing up a little bit. Okay, we are at around 61.8 Fibonacci retracement on the hourly time frame. So if it did push through, then we are going to come back to 1.1750, which is at 78.6. So until it clears off 1.1750, we're definitely not going to be looking at 1.17. But if it does clear off 1.1750, then yeah, we might see that push lower. I don't think there's going to be an intraday trade. You might want to wait for the US breakout if you want to, but in terms of range, I think it's already huge for an intraday trade, because we're already seeing looking at a market that moved down a lot significantly today. So yeah, that push lower, just be mindful. We got support one at 1.1740. So I'm looking at a little bit of a support to build up around 1.1750 to 1.1740. This is something you need to watch out for if you're short your pound USD. Pound USD or Euro USD, in terms of movement to the downside, I think the pound USD, it's probably going to move a little bit more than the Euro USD if it's pressured to the downside. So it's the US market is going to kick off, right? US 30 and the Nasdaq 100 or the S&P 500. That could be a good indication for you. If you're looking at reading momentum or sentiments in the market. But right now, let me just clarify a little bit from a technical side. Pound USD is trading below pivot on the daily chart. On the hourly chart. It's trading below 1.18. It's within the Ichimoku cloud, so we're a little bit unclear on that, but the overall trend remains to the downside for pound USD. You can see that clearly. I don't need to draw any resistance trend line or support trend line. Zoom out a little bit and you know what this market is doing. So if by going long on pound USD right now, you're speculating that price might bounce off. And some people might say that. It's just not my style. I don't like doing a counter trend trades. So yeah, just be mindful if you are listening to other people as well, and they say, I buy pound USD and stuff like that. Think about the overall trend direction. Thing. That's the thought there. All right, let me just answer the question on energy crisis first, and then we'll go into sterling yen. We'll have news in about 2 minutes time. Durable goods order, is that going to impact the market? I don't know. Shouldn't be. We are expecting I haven't talked about durable goods order. We are looking at a lower number. Expectation for durable goods order is actually at 0.6. From 1.9%, so a huge drop. If we don't get to see 0.6, maybe around 1%, that might give a little bit of a positive vibe in the market, but I kind of doubt it, because we've got the FOMC, the Jackson Hole Symposium starting tomorrow until Saturday. All right, numbers going to come in any second now. Let me just go through the question. What is my view on the energy crisis in the Eurozone? Price of natural gas continues to rise. All goods go up in Europe, including electricity and fuel bills. Will recession get closer in Europe? The expected recession that's likely going to hit Europe, it's actually going to be at the end of the year. we already have a number in terms of the estimation on how long that recession is going to be. So if a recession is confirmed this year, it will last until 2024. So again, energy crisis, sure, think about it, it's summer. Heat waves are hitting the Eurozone, the UK, and prices are already going up. Imagine that in winter. Numbers just came in. Let me just get the number. All right, durable goods order for the month of July is at 0%. That's way below 0.6%. It's basically a 1.9% drop. But the durable goods order X transport, that came in as per last month at 0.3. That's slightly higher than 0.2% expectation in the market. So I don't really see a huge impact in the market. I'm not seeing it on a pound USD, but let me just double check on the euro USD. Yeah, not seeing it either. So I think I think the market's just purely focused on what FOMC is going to say during the Jackson Hole symposium. That's basically what you guys are going to be waiting for, because you're probably going to be looking at volatility. We're probably going to be market's probably going to be reacting on any potential hearsay or whatever, right? But let's get back in line. So US got weaker a little bit yesterday. It's just a normal correction, or we expect some changes. I'm not expecting any changes at all right now. It's is it time? I'll talk about stochastics and RSI in a minute. I promised that last Friday, right? Let me bring up the dollar index for you. So, in terms of dollar index, we are kind of at the previous high, right? Around 109.30. Is it a technical correction? I don't think it's quite a technical correction yet. We are looking at a little bit of a upper barriers. Yeah. If we go on to the dollar yen, for example, we do see a little bit of a pullback, but that's kind of in line with what we saw on the pound USD and the euro USD, right? Now, in terms of dollar yen, let me zoom out a little bit. So the overall trend is obviously still to the upside. Now, in terms of if you guys are using Ichimoku and stuff like that, let's take a look at the Ichimoku cloud. It's actually really thin, right? All the way up until tomorrow, it's actually going to be thin. In fact, you know what? Tomorrow's it's still going to be quite thin on the dollar Japanese yen. It's basically just going to be about 20 pips in terms of the Kumo thickness. It might slip through, and if you take a look at this, the potential transition, what you want to focus on right now, obviously we've got 136.75 capping the market right now from further progress. If it does close above 137, at least on the hourly time frame, then we're likely going to be looking at a potential continuation to the upside for the dollar yen. Okay, that would fulfill the criteria that's actually going to be above the Ichimoku cloud, right? If it does go above 137. It might have enough momentum to actually continue to go forward. We talk about the dollar yen on Monday. I believe the potential target for the dollar yen was actually this, right? This is what we are looking for in terms of a swing trade. So I still keep it there. So again, if we do have that transition above 137, I think last Monday we were looking at 137.50, yeah? So some people will probably jump in on 137.50. If those that jump in on 137.50 and you want to go for a swing trade on this one, obviously your stop loss is going to be at 135. So this is a swing trade outlook that we did on Monday. You guys that just jump in might want to take a look at this. It's not going to be for everyone because you're going to be looking at a minimum risk of about 200 pips here. That's minimum risk. You might get tempted by looking at the target. Yeah, it's huge and stuff like that. It's just not for everyone. And again, this is not going to be an intraday trade. This could be trades that last a month or maybe more than a month. Really depends. Is it like a super crazy range or whatever? It's not quite crazy because if you take a look at the bounce from 130, 150, and 132. Safi got this trade. I know this for sure because people are asking about position adjustment on Monday. If we take a look at the whole movement to the upside, it was 600 pips. In terms of range on how long does that 600 pip take? It actually takes 4 days. So yeah, compared to what we talk about the Euro USD, you know what, it's 200 pips, not huge and stuff like that. The dollar yen is a little bit unique. So for those looking at a potential continuation for the dollar strength, this is basically it. This is my view on Monday's webinar. It's still going to be my view for today. If you guys haven't jumped in yet, then you might want to wait for a daily close above 137. Just let me remind you, it's not going to be for everyone. Okay, so if someone's going to comment on YouTube like last week, maybe tomorrow or day after tomorrow, I don't know, and say like, oh, I got my stop loss got hit, whatever, be mindful. This is like a 200 pip stop loss. It's not going to be an intraday trade. It's going to be a trade that could last you maybe a month or longer. So if it's not your cup of tea, stay away from this. I'm just showing it for those that want to know what my view is on dollar strength. This is still there. Okay, so let me go. So we clear on this, Albert and Solianto, on the recession views and stuff like that. With the recession views and the energy crisis right now, that's, or the energy, oh yeah, it's kind of an energy crisis, right? Energy prices goes up, push inflation up, causes a recession, right? Russia is going to stop gas flowing into Germany for 3 days. I believe that's going to happen at the end of this week or next week, or it's probably at the end of the month. But yeah, concern for energy prices, it's there. And also consider this, it's summer. It's not winter yet. Imagine what's going to happen in winter when yeah, everyone kind of needs that gas heating and whatever. Okay, so let's take a look at the question on RSI and stochastics. Okay, so I'm going to bring up RSI. We talked about this on last Friday. So if we take a look at using both RSI and stochastics, is it okay? Yeah, it's completely okay. It's not a huge deal. It's just that this, you might have one preference than the other. Whether or not you want to look at RSI, you want to look at stochastics, it's just look at two different things, right? RSI reacts a lot faster to price changes in price, so it'll create a lot of noise. In terms of reading the RSI, it's not going to be like stochastics, right? We got stochastics, we got the slow stochastics, we got the fast stochastics. You know, it crosses up, it'll kind of give you an indication of whatever not. But if you go just for RSI, it's just one line. What are you going to look at it, right? So you kind of really need to understand in terms of the potential downtrend or whatever. Remember, if the market is in a downtrend, it will find a little bit of resistance at around 60, right? We are between 40 to 60, so it's actually kind of flat. We don't have a lot of momentum on the dollar yen right now. So until it actually goes above 60, we're not going to be looking at a potential, movement to the upside for the dollar yen. If it doesn't drop below 40, we're not going to be looking at a potential. We're not going to be looking at a continuation to the downside for the dollar yen. Stochastics doesn't tell you that. So if we focus on stochastics, it doesn't tell you that. Stochastics only tells us one thing. Current momentum, it's pointing to the upside and it's picking up, but it's not going to reflect how price is. RSI will pick that up much better than stochastics. Okay. So is it okay to use both? If you use it correctly, it's okay. The only reason why I tell a lot of people to just pick one, it's kind of so that you avoid overloading yourself with a lot of information in the market. Because right now, if we take a look at the stochastics, momentum is picking up. We could see a potential to the upside, blah, blah, blah. But the RSI says, but we're not above 60 yet, so you might want to wait a little bit. You can wait for both of you to give that confirmation. But once the RSI breaks above 60, if RSI goes like this, right, above 60, the stochastics could be very close to 80. So, I mean, if that happens, then you're going to get freaked out because the stochastic is already closing up to 80. But again, if you were here from Friday's webinar where we talk about momentum in the market, I'm not really too concerned, because if the stochastic stays above 80, it might actually means that the trend is actually going to continue to go faster to the upside. So yeah, that could be something to look into. So that's probably why I don't actually tell people to actually look at both. Again, in terms of overbought, oversold condition, what we were talking about on, let me just go into the daily for a little bit here. So here, right, I'm going to talk about RSI first, if that's okay. So let's take a look at the market here. This is not overbought. That's not overbought. Okay. The overbought condition only happens down here, and then it kind of fluctuates up again. So I'll point 2 points, which is there, and here actually. So about there and there. Okay. So that's price for you. In terms of the overbought condition, it's one thing we need to be clear of. Let me just talk about it. We are in an uptrend, a very defined uptrend. So we don't actually look at the overbought condition as a potential sell in the market. But is it overbought? Yeah, it's overbought here. It's not overbought on the first vertical line. Is actually overbought here. Okay, if I can highlight this as well, that's the overbought condition over there. Okay, when it goes above 80, that is not overbought. Goes above 80, not OB, overbought. Okay. So maybe I'll stretch it out a little bit. When price gets above 80, it's not overbought, which is there. Right? This is what we're looking at. Okay, so at this point here, I'll change it to red, thick, there. That's not overbought. The overbought condition is actually this 2 lines here. That's overbought. Okay, if we take a look at the market here, where it goes above 80 in an uptrend, it speeds things up, right? In terms of range, you can take a look at the range here. It kind of speed up until it goes below 80, which is around there. It slows down. Okay, that's the thing. If you read this wrong, that's a move of about 600 pips. Okay. When it starts being oversold, it starts coming down the first time around, take a look at the range. It's actually really, really flat. It'll take up until the second overbought condition to actually confirm the correction to happen. That's where we see that deeper pullback. Obviously, that pullback ends very quickly in an uptrend because we have that oversold condition over here. Okay. Which is there, actually. So if stochastic goes above 80, it's not an overbought condition. It needs to go above 80 and then come back down for it to be overbought. Oversold, it has to go down and then go up for oversold. So oversold needs to be less than 20, then above 20. Okay, hopefully this is clear. Now, that's for stochastics. How does it apply to RSI? Because if we take a look at the RSI, it's a little bit unique, right? We got 70 and 30, but it doesn't indicate anything. In fact, the oversold condition on the RSI is actually there. So something is wrong, obviously. And this is why I say, this is probably why I say pick one. Don't look at both unless you understand what you're looking at. Because if you look at the RSI here, we've got the market really pushing up, then the RSI become oversold, right? It dips down. But technically, this is not applicable because it's an uptrend. The RSI is suitable for more of an uptrend, a trending market. So if you only use RSI as an overbought, oversold condition, then you would consider this as an oversold. But again, don't go against the trend, and this is probably why I don't trade against the trend. But yeah, people might get it wrong and say, I'm looking at the market going up and then down, so it should be oversold, right? And technically, no, because if we take a look at where it's bouncing off from, so if we have 40 to 60, okay, this is kind of neutral on the RSI. So if it's in an uptrend, the support area is actually just right around 40. So it's not a good indication to jump in short on something that's trending to the upside, and that's probably that. So if you take a look at the RSI, any good indication to go in long? Actually, none. The RSI actually hasn't given us any information on going long, because technically there's no oversold condition in an uptrend. So yeah, it doesn't give you any indication. So if you go by an overbought, oversold condition, obviously you have two different scenarios. The RSI doesn't give you that oversold condition. The stochastic does. Okay, so there's a difference in how we use stochastics and RSI. So if you're not really if you haven't mastered one of this, I wouldn't take a look at both at the same time. This is the reason why I say pick one. And I pick stochastics because I'm just used to stochastics. The RSI, it's great. I'm not saying RSI is bad. It's great, but it doesn't filter out the market noise enough. And you really need to understand the correlation between 40-60. Right, you kind of need to understand how trend works by looking at the RSI. Stochastics doesn't provide you with how the trend goes, so that's something different between the RSI and the stochastics. RSI will tell you the trend. Stochastics will not tell you the trend. So in a choppy market condition, the stochastic is actually a much better indicator to use. In a trending market, the RSI wins. Simple as that. Because if we are in an uptrend and you go by RSI, it's pretty simple. Any bounces off from 40 or any move above 60, that's a good indication that the trend is likely going to continue to go. Okay. I'll go to AUDUSD in a minute. Let me just go through what are the most important watch lists to take into consideration, I believe, before placing a trade. Our watch list is going to be different to everyone else. It's really more on what you're focusing on. I focus more on pound USD, so I take a look at sterling yen. Because I take a look at sterling yen, obviously I need to take a look at dollar yen. Between euro USD and euro yen, I trade. I'll trade the both of them alternating. I'm not going to take Euro USD and Euro Yen trade at the same time. That's basically not my style. Pound Yen and Pound USD, sure, I'll take them both. But again, look, I'm more sterling biased, right? So those of you that know my trading style, I focus a lot more on the sterling side. Don't really like the range on the euro. So in terms of what you need to consider, obviously, among other things, I think you need to know what the equity market is feeling. I think you need to know what the sentiment in the market is, obviously. Is it risk averse? Is it is there any risk appetite in the market? Right? Is it risk on or risk off? Obviously. So you kind of need to know the sentiment. Then It might help if you know how to read the VIX as well, the fear index, which is actually the CBOE volatility index. Anything above 19, we consider that to be fear in the market. There's a lot more implied volatility in the market if the VIX goes above 19. It did spike up to about 32 just not too long ago. Right now it's actually up again, right? It's around 24. So yeah, it was at about 32, 35 in May, June this year. So I think VIX is a great indication. Okay. So let's take a look at the Aussie USD next, because there's a lot of requests for the Aussie USD. Aussie USD, nothing much, right? I think we still have this projected targets for the Aussie USD. This is actually from a daily view, yeah? There we go. So the projected target for daily is actually at potential return towards 68 and 67. That's if you want to go into more of a swing trade. In terms of position adjustment, I think in terms of stop loss, we can minimize this stop loss. This was originally at 181, but you can move it down to about 92. So is it to your liking? I don't think it's for everyone. It's within the Ichimoku cloud as well, so I don't really like this in terms of potential swing trades. There's a little bit of unknowns factors on the Aussie USD. So I think Aussie USD is a good example. If we take a look at the RSI here, we are looking at a market that doesn't have a clear trend, because it's actually fluctuating between 60 and 40. Okay, but if the RSI breaks below 40, the stochastics will probably maintain a position below 20, and that could trigger that drop on the Aussie USD. But again, the overall tone on this one is a little bit flat, because if I zoom out a little bit, it's actually within range of the. Let me get that. It's actually between this and that. It's about 455 pip of range. We are actually in the middle right now, around 69 cents. We are at pivot of that range. So a little bit flat on the Aussie USD. That is from the daily perspective. If we go on to the hourly perspective, again, it is choppy. It is a little bit range bound-ish. It's just hovering around 69. Okay, so we need to have the market close below 69, 68.75 to be a little bit clear. If you're planning to go for a short, I would probably say don't jump in right now. You might want to jump in around 68.75 or even lower, 68.70. But if you did jump in short on the Aussie USD, then yeah, you are kind of stuck with it, with the stop loss at around 69.63. We'll probably adjust it a little bit higher at around 69.75, but that's that. In terms of view on the Aussie USD, is a little bit flat here. Oops, did I just scroll that? Okay. All right. There we go. Sorry, I need to adjust this. In terms of stop loss, this was adjusted wrong. Can I get that back? No. There we go. Sorry. All right. That will be your stop loss. It will be at around 69.75, right? That's the best you can go. So let me clear off the stochastics and whatever not, because I'm unable to look at anything like this. But yeah. Here we go. It is a little bit flat in terms of an intraday perspective on the Aussie USD. In terms of fibs and stuff like that, it's a little bit unique because it's kind of choppy. So we've got this to here. That's going to take us around 61.8 to 78.6. So until we clear off that 68.75, 68.70, we're not going to get an entry or anything like that on the Aussie USD. So if you're expecting to go for an intraday trade on the Aussie USD, probably not a great idea, because again, it's really choppy. We are looking at pivot level around 69 cents. It's gonna orbit around 69 cents. So probably not the best currency to actually look into right now, today. If we got momentum building up on the Aussie USD to the downside, then it needs to break below 68.70. In terms of daily, it might need to break below 68.50. So this is huge, right? I mean, we are talking about a 455 pips range. We are right in the middle of it, around 69. So if you got trades and you want to target Aussie USD, you can go for 68 cents and 67 cents, but that's kind of really pushing it. Okay, so I'm not looking for any buy right now, at least not on the Aussie. The risk is too much, especially we got Chinese data coming in really bad. The Chinese central bank has been cutting interest rate so 2 times in 2 weeks. So every Monday they just cut. Last week they cut 10 basis points on the 1-year line, and then this Monday they cut by 5 basis points in a 1-year line. Industrial production was low. We got economy coming up from the COVID restrictions in China. So yeah, it's kind of to be expected. I'm not really too keen on going long on the Aussie right now. Plus on the daily is actually within the Ichimoku cloud. Other than that, momentum still drops below 20 right now, and on the stochastics, we might see the RSI drop below 40. If the RSI drop below 40, it might speed up. So not too keen on going long on the Aussie USD. Okay. Vivekanan Dwivedi, do I get this on the Aussie USD, Miss Mary? We good on the Aussie USD? I don't like the Aussie USD as a currency to focus on, at least not today. Okay. Right, we got US oil. Before we wrap it up for tonight, US oil, I believe I looked at 95, a return towards 95 on the US oil, but just let me double check. I think it did bounce back up to 95. It did. Okay, so US oil ABCD done. Where was the US oil that I have? Is it this one? There we go. No, it wasn't this one. Alright guys, I got a few templates. I just need to sort out US oil. Okay. Is it this one? Yeah, it's actually this one. So we got support on US oil. It was trading below 92. I think a lot of you were short US oil below 92. Right now it's back above 92. We have a little bit of a resistance coming in at 95. Can I close one off on the RSI and stochastics, or do we want to use this to read on the potential changes in momentum? Okay, so we do have a little bit of a correction to the upside. It's not really a correction because we have a run up to the upside on the US oil. So US oil recovered a little bit. I think that's on the back of energy crisis. We got a key number at 95. That would be your immediate resistance for the US oil intraday. You need to keep an eye out on 95. Okay. On the RSI and the stochastics, in terms of which one do I prefer to choose, do we have any divergences? We cannot classify this as a divergence because it's really flat at 95. So yeah, we don't consider this, but there is a slight divergence. I'm not expecting too much from both of this because on the stochastics, the divergence is not really a full cycle divergence. So not really too concerned on this divergence. So I would classify that I don't see that divergence on the stochastics. Do I see that on the RSI? Yes. Thing is, with the RSI, you need to keep an eye out on 40. So if price doesn't break below 40, it might bounce up. It might be an uptrend. Okay, it's huge, right? There's a lot of room to go to the 40. In terms of correction, do we expect a little bit of a correction to happen? Potentially, yes, because we do have this FIB here. If price breaks below 23.6, do I expect a little bit of a correction? Yes, I would expect a little bit of a correction between 90 and 91. So 90, 91. That's where I'm expecting a little bit of a correction towards on oil if it does break below 93. So there's a lot of criteria on this. If you're thinking of going short, make sure your stop loss is above 95. You only go short if it does break below 93. And in terms of target level, you're not going for anything beyond 91. The risk reward ratio is not going to be pretty. If you want to go for 90, risk reward ratio is going to be slightly better. In terms of range, you're looking at minimal range for oil, really. You're looking at about, maybe $2.30 for stop loss, $2.80 for a potential target. But that's that. If you are long oil, you should have gotten out at 95, but if not, then yeah, you probably need to scale out a little bit around if it does break below 93. Oh, you're asking about whether you want to hold that daily long on the Aussie. I don't have an issue with that. I think we discussed this on Monday. Yeah, you were there. So on the daily, this is the scale of things. I don't see any changes. That's that. In terms of stop loss, you can adjust your stop loss. It doesn't have to be all the way up there. I think you can drop it down a little bit to about 69.75. That should be fine. But yeah, in terms of target level, is unchanged, 68, 67. Feel free. This is something we talk about on Monday. Yeah, whether it's going to go down or not, I think it's going to depend on the FOMC's stance on CPI, which is on Friday. We'll find out what the FOMC is going to be. I think the whole market's going to be a little bit waiting for that. If the FOMC is hawkish, then obviously the AUDUSD is going to go down, the EURUSD is going to go down, the dollar yen is going to shoot up, the pound USD is going to go down. Oil, unknown in terms of oil, but gold would probably crash as well if the FOMC is going to be hawkish. If it's going to send a strong message if the FOMC remains focused on price stability, knowing that the CPI was off a little bit. Okay. Anyway, back to oil. I think we were talking about oil. I'm pretty clear on oil here. Intraday wise, if it does close below 93, then yeah, you might potentially want to go short on oil. But in terms of target level, you pick one between 90 and 91. I would probably prefer 91 because that's where the Ichimoku cloud is going to be as well. In terms of requirement, it needs to break below that 23.6, so it needs to close below 93 on oil. I would be mindful for oil because it touched 95. The pullback on oil was really strong. I think one of the main reasons was actually the output adjustment that OPEC announced as well. That's basically what's driving the US oil. Sorry, not the US oil, just the overall oil market. Not really my cup of tea right now in terms of oil. It was great. All right, we had a great trade on oil last year from November until March. That was a good run. I haven't been too keen on oil after the whole initial spike on the Ukraine Russia war, but right now it's kind of a little bit choppy. So yeah, I haven't had a swing position yet, especially once it breaks below 92. I was planning to go long if it bounces off 92. It broke below 92, then that was kind of like the cue, like it's not stable enough as of yet. So not looking at a potential longer term position on oil as of yet. It might be a little bit choppy. It's likely going to be range bound between this and this. Between 95 to 85. That's give or take about $10 range. Okay. Right. Well, it's been an hour. Okay. So yeah, that's the overall update. We don't have any impact on the durable goods order. We've got housing number coming out in the US in about an hour's time. I don't think it's gonna have a huge impact unless the data is like really bad. Last month's number was negative 8.6, expected to drop by negative 4% again. Pending home sales for the month of July. If it drops below negative 6, then yeah, we might see a little bit of a quick blip in the equity market. But you know, I think Jackson Hole and the GDP numbers tomorrow from the US, that's going to be really key, right? GDP numbers is tomorrow for the US as well. So we got the Jackson Hole tomorrow. The speech doesn't happen until Friday, so tomorrow and Friday, basically the rest of the week, give or take. I think we're looking at a market that's fearful of what the FOMC could, how the FOMC could impact the market. I think that's basically what we're looking at right now. Okay. All right, guys. Don't notice any other stuff that I haven't talked about. We talk about Aussie USD. I think there's one thing on sterling yen. Am I missing something? Right. Let me just quickly answer this on sterling yen. Can we use resistance trendline and only to plan sale? No. I don't. You could if you want to, right? You could. I just don't like taking a short position on a resistance trend line because you're dealing with a lot of unknown here. If you are shorting this is probably what you're going to be looking at. It's kind of guessing where the top is. All right, that's not my cup of tea. If you take a look at the momentum here, overall it's pushing to the upside. Potentially it might even break that. That's around 161.50. So yeah, that's where people messed up. It's basically using 61.8% Fibonacci retracement as potential short on the market. That's basically it, right? It's basically doing this, and I expect price will go up to 61.8, 78.6, maybe around there, and then fall. And I'm waiting up there with a short position. It's crazy. It's risky, crazy, and this is a problem that I saw. You know, people giving analysis in the market, and they say like, oh yeah, you know what? You should just wait for a sell at 161.60. I don't like that. I would much prefer that I see the market test this, it failed, and then create some other confirmation for us to go short. Okay, so. You know what they say. We as an analyst, as a trader, you know, we call this. We say this. It's like catching a falling knife with your hand, right? You're likely gonna get stabbed. So that's basically the same scenario here. I would say, yeah, there's a resistance trend line. If it breaks to the upside, then I might cancel out my trade. My short trade. That's the way to look at things, right? What if the momentum turns around, it picks up, and then, you know, even if you look at the RSI, it goes above 60, then it starts trending to the upside. It might break this if you have a short position there, and then the market goes up like that. Of course, you're gonna get wasted, right? You might have a short position there, and you want to go for that swing high over there, and then you got this. Yeah, you're potentially targeting lower, maybe 160, 60, 50. You're looking at that risk. So is it worth it? Probably not. So yeah, probably not a great idea. You can use that trend line as an indication, but is it a good place to go for a short? Probably not. So be mindful. Oh geez, now we got adult dating site. Fantastic, man. All right, guys, I think it's time to wrap it up. We're starting to get nonsense in the chat. Have a great week, everyone. Don't forget, we do have a session on Friday. Is the speech gonna be on time where we're doing that? No. So it's after the webinar. Anyway, we got basic technical analysis tools for Friday. So newcomers, you're most welcome. Guys, want to refresh your basics like this trend line, jump in on Friday. We'll talk about trend lines on Friday. So let's try and use trend lines correctly. Okay. So yeah, I'll see you guys on Friday. If I don't see you on Friday, I'll see you on Monday. Have a great week, everyone. Don't forget we've got the Jackson Hole Symposium starting tomorrow until Saturday. Okay, so a lot of volatility is likely going to be in the market. A lot of uncertainty, especially on Friday. So be mindful of your positions. Be mindful of your swing trades. If you do have your swing trades, think about it. If you're not comfortable, get out. Don't get too greedy, because I think a lot of you should be out of your trades from the drop yesterday. So good luck with your trades, and I'll see you soon. Have a great night.